Ever wondered how to make your investments work harder for you? Welcome to the world of DRIPs or Dividend Reinvestment Plans. This strategy lets companies and investors do more with their cash dividends. Instead of pocketing these payouts, they're automatically put back into buying more shares. That's right, you're not just earning dividends, you're using them to grow your stake in the company. It's like your investment is on autopilot, constantly expanding its own reach. So how exactly does this drip magic work? Stay tuned to find out. What if I told you that drips can be the secret weapon in your investment strategy? Yes, you heard right. Dividend reinvestment plans, or DRIPs, can be a game changer. They are a smart way to take advantage of the power of compounding. Imagine this. You're a shareholder, and instead of taking those dividends as cash, you reinvest them to buy more shares. Now, those additional shares can potentially yield more dividends, and so on. It's like a snowball effect, growing your wealth over time. Another advantage of DRIPs is dollar cost averaging. This means you're buying more shares when prices are low and fewer when prices are high, without the stress of timing the market. Last but not least, DRIPs offer the convenience of automatic reinvestment. No need to keep track, it's all done for you. Sounds fantastic, right? But let's not just talk, let's walk through an example. Picture this. You own shares of a company that pays dividends. Let's say you own 100 shares of a company, and it pays dividends of $1 per share. That's $100 in your pocket, right? But with a dividend reinvestment plan, or DRIP, that $100 is used to buy more shares instead of being paid out to you. Now let's say the share price is $20. Your $100 dividend can buy 5 more shares. So now, instead of 100 shares, you own 105. Here's where it gets interesting. The next time the company pays dividends, you're not just getting dividends on your original 100 shares, but on the extra 5 shares too. This means your dividends have increased, and these extra dividends can be used to buy even more shares. This is the power of DRIPs. It's a cycle where your dividends are used to buy more shares, which then produce even more dividends, which can buy even more shares. It's a process that can continue indefinitely, leading to an ever-increasing number of shares and an ever-increasing stream of dividends. Even small amounts can grow significantly over time through this process. It's like rolling a snowball down a hill. The more it rolls, the bigger it gets. And the bigger it gets, the more snow it can pick up. Quite a snowball effect, isn't it? Now, how can you get this snowball rolling? Getting started with DRIPs is easier than you might think. The first step is to ensure that your broker offers the option to enroll in a dividend reinvestment plan. Most online brokers do, and if yours doesn't, it might be time to consider a switch. Once you've confirmed that your broker offers DRIPs, the next step is to decide which of your stocks you'd like to enroll. This decision will depend on your investment strategy and financial goals. After you've made your decision, the process is straightforward. Usually, it's as simple as navigating to your account settings and checking a box to opt into the DRIP for your chosen stocks. However, it's always a good idea to reach out to your broker's customer service if you're unsure about any step of the process. And there you have it. Just like that, you're all set to start making your investments work harder for you. So, we've unraveled the mystery of DRIPs. We've taken a journey through the world of dividend reinvestment plans, and what a journey it's been. These powerful investment tools allow you to reinvest your dividends back into more shares, automatically and usually without any additional fees. We've also seen the magic of compounding, where the dividends from your increased share count can themselves generate more dividends. It's like a snowball rolling down a hill, growing larger and larger as it goes. We've shown you how to enable DRIPs in your investment account, putting you in the driver's seat of this wealth-building vehicle. And remember, DRIPs are particularly useful for long-term investors, those who are looking to steadily grow their wealth over time. By using DRIPs, you're not just investing in a company, you're making every dividend work for you, creating a cycle of growth that can lead to significant wealth accumulation. Remember, with DRIPs, every dividend can be a stepping stone to more shares and potentially more dividends. Happy investing!